Every trader has used Fibonacci at some point, and one of the most popular of those Fibonacci tools is the Fibonacci retracement. But though it's popular, the majority still uses it wrong, drawing from the wrong swing points, entering at the wrong zones, targeting the wrong levels. So we thought, let's fix that. Today's indicator won't just automatically draw the Fibonacci for you, but it will also detect price patterns within the most important of those zones to provide sniper entries. Take a seat and pay attention, because this new indicator will do 90% of the heavy lifting for you. Let's jump right in. Now, before we get to the indicator, let's first talk about Fibonacci. Originally discovered by Italian mathematician Leonardo Fibonacci, this sequence appears everywhere in nature. From the arrangement of leaves on a stem to the spiral of galaxies, even the proportions of your very own body. So how does this all tie into trading? The ratios used in Fibonacci are applied to price data and often align with sections of the market where we have clear and significant price reversals. So traders started using those levels to spot opportunities. And this is where we have the issue, because manually drawing these levels can be tricky. Not everyone is a scholar and understands how Fibonacci should be used. This is where this indicator changes the game. When you load the indicator, the first thing you'll notice is it overlays the retracement levels directly onto your chart. These levels are the most popular Fibonacci ratios, like 0.38, the 0.5, and 0.618, also known as the golden ratio. The golden ratio is considered one of the most reliable of the levels. When the price pulls back to this level, we keep our eyes peeled for a sharp reaction. Now you can see how the indicator automatically draws these zones. But that's not all. We wanted to ensure that users are able to develop confluence with this indicator. To achieve this, the indicator also detects significant reactions from these levels by identifying engulfing patterns. Let's break this indicator down step by step, showing how a trade is detected. First, the indicator identifies the market structure, which you can see using these swing levels. This feature can be enabled in the indicator's settings, and you can even customize the style of the icons used at these levels. When a market structure shift happens, a change of character label is plotted on the chart to mark the break, but the indicator will not draw the Fibonacci tool just yet. In this downtrend, for example, it will wait for a low to first be established. Once this happens, it then uses the high of that move down, and the low to draw the Fibonacci retracement between those swing points. As price retraces through these levels, the indicator waits for a bearish engulfing pattern to be detected. Once this happens, it signals a valid setup and the triangle appears above the candle. At this point, you can check for the untested Fibonacci level above to be used as the stop loss, while the swing low can be used as the target. If we go into the settings of this indicator, you'll find a number of options. The first is bullish and bearish structure. Enabling either of these options allows you to focus on bullish or bearish setups exclusively. For example, in a bullish market, you can remove bearish setups for a cleaner chart. There are also styling options that let you change the colors of the detected setups and customize the line style used when a change of character is detected. Below that, you'll find settings for retracement levels, which can be enabled or disabled. You can also customize these levels and add any additional levels you may be interested in. Finally, as mentioned earlier, you can enable or disable the swing levels shown on the chart and choose whether engulfing patterns are detected. Now, while this is all great, it's important to remember that just because this indicator can detect potential setups or entries, it doesn't mean you should take every setup blindly. For example, let's say you see a possible setup after a bounce from a key Fibonacci level. A crucial part of this process is waiting for the indicator to detect a bullish engulfing pattern before considering the setup fully validated. But don't stop there, because once the engulfing pattern is detected, you need to evaluate the risk to reward ratio of the trade. You'll place your stop loss at the untested Fibonacci level and set your target at the swing high, which the indicator highlights. If this setup risk to reward is lower than 1 to 2, then the setup might not be worth the risk. But if greater, then we might be interested. By taking this approach, you ensure that you are aligning your trades with a strategy that increases the long-term probability of success and filter out less favorable trades. Another important thing to remember is that a good risk-to-reward ratio is not the only factor to consider. Confluence doesn't have to stop there. You can also use additional indicators to build more confidence. For example, in this case, we're using the Neo Cloud feature from the Signals and Overlays toolkit. This feature is primarily designed to detect long-term trends while ignoring minor retracements and noise. Here, we can see that a Fibonacci setup was detected in the same direction as the Neo Cloud. This alignment confirms that the market structure supports the trade idea. Let's list all the confluences here. We have a bullish change of character, the Neo Cloud providing strong algorithmic trend confirmation, and a bullish engulfing pattern confirming the trade entry at a major Fibonacci level. Once again, we can set the stop loss at the untested Fibonacci level provided by the indicator. Since we're trading with the long-term trend, we can also consider holding these trades beyond the swing high levels highlighted by the indicator to potentially capture even greater profits. This indicator is called the Fibonacci Confluence Toolkit. Whether you're analyzing market structure, retracements, or engulfing patterns, this tool does it all. You can find this indicator for free at luxalgo.com/library. Give it a try and let us know what you think in the comments. Thank you for watching.